I'm Jeff with Kasteel Property Management, and today we're here with Jen McAllister with Rise CPA and Accountants. So I'm actually really excited about what we're going to talk about today, especially the last points that I want to get to of tax strategy. So you've taught me multiple times to not think of taxes as just reporting what we did in the past year, but to plan ahead and figure out how to make our taxes better in the coming year with what we do today. And so that's really a lot of exciting points that I want to get to. But first, I've heard you talk about the origin of your company a little bit, and I found it very inspiring. So I was hoping you could tell us a little bit more about that.
Yeah, absolutely. It's a long story, so I'll give you the shortened version. I worked for a corporation for a number of years, and I took a lot of pride in finding, growing, developing the staff to 18. And they decided to get to a larger scale, acquire some companies and go public. And during that time, they started to run out of money. And one day I was surprised by the announcement that you don't have a job here anymore. I was completely blindsided. That was on a Thursday. I had a sleepless night, Thursday night, as you would expect. And the next morning I woke up and I knew what the name of my own company would be. Because I always wanted to start my own company. It was just more of a 5-year plan, but this became a 5-minute plan. And so I knew when I woke up that the name of my company would be Rise. And it meant so much to me. It meant, rising out of your circumstances, helping those around you rise, helping your team rise, and just everything about it was very clear that this would be the name of my company. And I didn't waste any time. I didn't want to wallow in self-pity. There's just not a lot of, nothing comes from that. And so I got my name registered on Friday with the state and with the federal, with the IRS. And by Monday, I had created a website and I was in business. Just, not waste any time.
Awesome. That's fantastic. Because being an entrepreneur myself, I understand the stress of getting your company up and going, and you're kind of stepping into some gray area, but it's inspiring. I always just love hearing other entrepreneurs and their story, and that they, it takes a lot of just pressing forward and making it happen. So
right, and that's where growth comes, is when you're uncomfortable and you're sometimes forced into a situation that you weren't expecting, you don't want to be in. And that's the beauty of growth.
Yeah.
You just have to be uncomfortable.
Yeah. It's one of those blessings that you don't know it's a blessing yet, right?
Yes.
You're losing your job. That doesn't sound like a great thing,
right.
but it turns out to be great. So one thing that I've noticed about accounting and how important it is for entrepreneurs is that businesses are generally made up of a lot of gears. There's a lot of moving parts, and accounting is a big gear. It's really important. It factors into running all the other gears if you're doing it right. And if you're not doing it right, it can mess up all the other gears and mess up your business. So what are some ways that Rise Accounting helps business owners and entrepreneurs?
Yeah, absolutely. I think you said this, is a lot of times you look at accounting like, it's something maybe you look at once a year, like when you're filing your taxes. And if you're looking at it that way, you're absolutely not utilizing your financials the way that you should. Every month, you should be looking at that, and they have a story to tell. And that story is the story that you need so you can decide how to pivot your business, because you don't want to wait 12, but let's be realistic, 18 months, because extensions on taxes. What good is it to wait 18 months and then look back and go, oh, I wish I would have known that 18 months ago. So your financials are so important. It's also important that they're accurate, because you don't want to have a false story. You don't want to be looking at your profit and loss done by a super non-qualified person and you're like, oh, it looks great. And when in actuality, it's not the story. So you need to hire someone qualified like myself and my company so that you have an accurate story.
Yeah, I love that. I love the idea of talking about it like your finances are a story, because I know a lot of accountants get stuck in a rut where they're just used to reporting what has happened. Mm-hmm. It's just a way of organizing the past. And when accounting can be really exciting when you think of it as, this is what's going to steer my company. These numbers are telling me information so I know where to spend money, where not to spend money, so that I can pivot, as you said, and so that you can even project the future some. And that's exciting, you know, rather than just number crunching of what happened last year.
Yes, and it's also the organization of the financial statement. Many people put all the expenses at the bottom, like everything's an expense, but that's not the right way. What's a really important part of the financial statement is a cost of goods sold. And if you don't have it arranged properly, you might say, oh, my net income is -$5, so I need to sell 1 million more XYZs. But if you're not reading it properly, that -$5 times 1 million, now you can have a $5 million deficit. So it's not just like, oh, I need to sell more, I need to sell more. You need to understand, am I charging the right price? What are my cost of goods sold? And then what are my expenses that can be manipulated, where cost of goods sold cannot be manipulated? So it's really, again, important that the structure is right as well.
That's good, because I know for myself, a lot of times, you know, in the past, I'd look at my income statement and I jump right to the bottom line income, because that's the happy number, right? You're just like, oh, that's nice, you know, I like that. But of course, that's half the story.
Right.
And so anyway, I've appreciated what you've done for my company, because you've helped me put things in order and get my story put together in a way that it's useful for me. So that's, anyway, highly recommend Rise Accounting.
Thank you. And then we teach you how to read, so to speak. A lot of people, they get their financials thrown at them and they're just like, oh, thanks. Like, it's like reading a foreign language, but we love to, you know, hey, ask us questions. Let me tell you how to read this. So one thing that a lot of people that I deal with in the real estate industry, some people are looking or considering to buy real estate, and sometimes they'll take a really simplistic approach and say, you know, without a big down payment, this home is going to negative cash flow for me, so I don't want to do that. What kind of tax benefits are there to owning real estate that maybe the new investor is not considering, as to why, even though their property could be negative cash flowing, that at the end of the year it may be more profitable to them than they're thinking of? Great question. I can think of 3 things right off the bat. One is it's a way to postpone your tax liability. And I say postpone because, being realistic, you never just get out of your taxes, but it's a good way, like if you're making a fair amount of money in a given year, having a real estate property gives you really large tax breaks so that you don't have to pay those taxes in the given year. So huge tax breaks, that's a big reason. Another reason is real estate grows so quickly. You just can't go wrong with real estate. So you may be breaking even or possibly negative cash flowing, but let's say, for example, you're negative cash flowing a couple $100s a month. What's that in a year? $2,400. Well, do you really think that your property after one solid year is not going to appreciate by at least $2,400? So it's the appreciation that people that talk to you like that, they're not considering. It is not just the cash flow. And then another reason is just being able to utilize tax deductions in creative ways that we haven't talked about yet, but really just being able to use a business structure and utilize it in ways that can just help you personally as well. Yeah, exactly. I often ask people, you know, they say, well, the property won't cash flow for me. And I say, well, does your mutual fund cash flow? Right? You know, people are used to just saying, well, to make my mutual fund work for me, I need to put in $500 a month to make it grow and to help it there. And I think of real estate, you know, at least when you first buy it, a lot of times it'll negative cash flow, especially in the Utah market. So what if it negative cash flows, right? If you're planning on investing money into something, find the thing that grows the most with that monthly investment. If that's your mutual fund, go for that. I personally see real estate grows much faster. Yes. Right? With just rough numbers, with a $40,000 down payment, you just picked up a $250,000 asset. Well, that $250,000 asset is going to grow much faster than
maybe if you put that same $40,000 into a mutual fund, you only have a $40,000 asset in a mutual fund.
Yes.
So that appreciation is huge.
It is. And you look at the wealthiest people in the United States and even in the world, the majority of them are investing in real estate. Enough said.
Yeah. Yeah. If you want to be wealthy, do what wealthy people do.
Yeah.
Now let's get to the exciting stuff. So tax strategy. Give us some of the things that you've taught me that have kind of opened my mind to ways of thinking better. What are some of those things of how when you have real estate or a business or both that you can use that to your advantage?
Yeah. So first of all, I appreciate that you say accounting and exciting in the same sentence, and that's made me smile because no one ever says that. But I can honestly say that these next few things that I'm going to talk about, that we'll discuss, they really are exciting, and this is why. So traditionally, people will think, let's say you're getting near the end of the year, and say you have $50,000 in profit, and then you go, oh no, what should I spend this money on so that I don't have to pay as much taxes? And that is not the best approach. You don't want to just spend the money so that you're not paying as much in taxes, but instead with planning. And I can't say that word enough. Planning ahead. You mentioned in the beginning, it's not that you get to the end of the tax year and look back and say, oh, what could I say was a tax write-off? Wrong answer. But when you look at it in advance and plan for expenses that you're going to pay for anyway. So look at those and think, how can I turn this into a tax write-off? And I'm going to give you an example. So offline, Jeff said, I really want to buy a razor, a side-by-side. How could I make that a tax write-off? And I don't even know if you said, how could I? But I said, let's talk about how you could make this a tax write-off. And I think in most situations with planning and creativity and documentation that they can be a tax write-off. So I'm going to tell you 3 different ways that I've thought of with how could a purchase of a razor side-by-side be a tax write-off. One of them would be you create a business, a separate business, and it's a rental business. And so you buy the razor and then you legitimately rent it out and you have income. So let's say your razor is $25,000 and you've rented it for $5,000. So at the end of the year, you have a net loss of $20,000. Now, if you were just a regular employee with a W-2 job, would that $20,000 loss do you any good? No. But I know you have another business, a property management business, and it is turning a profit. So that net loss of $20,000 gets to be netted against your profit in your other business. So there's one way. Another way would be, and this is you dig a little deeper, but let's say that you needed a vehicle to get around to the different properties. And if you could document and justify that razor was the vehicle that you utilized to go around to your different properties, then that could be another way.
Could call it the Kasteel Mobile.
Yeah. And documentation, that is key. So you would really have to, some people might say, oh, let me just say that I used it and I took a client on a trip or just something. But again, that's a no-no. Just
make it legitimate.
Yeah, make it legitimate is the bottom line. That's just a couple of ideas to get your mind flowing with how you could take something that you wanted anyways for your family and how you could turn that into a tax write-off. And I'm going to give you another example. I'm a part of BNI, Business Network International, and that is what helps grow my business. Well, they announced that at the end of this year, their yearly worldwide event will be in Honolulu. My daughter also lives on the same island, and so typically I would pay the money to go visit her anyways, the airfare and the hotel, and it would just be no tax write-off because I'm just visiting her. But as I plan ahead and I know if I go to that conference, attend the conference, and visit her, then suddenly my air ticket, my hotel accommodations and the food, they're a tax write-off because I have attended the BNI conference that is directly affecting and growing my business.
I like it.
So yeah, I have lots and lots, but those are a couple.
Yeah, I like it. It always comes down to, as I've done similar interviews like this, it always comes down to when you're doing something, just don't be afraid to talk to the right people, right? You get professionals around you that know more than yourself, and you know your thing, and they know their thing, and they know their thing, and you get all those people around you, and you go forward with the right information. You don't have to know everything.
Yes.
That's the wonderful part about it. So vacations. That changes my world on vacations.
Yes.
What can I do that is one, effective and useful for my business, but something I can do with what I'm doing anyway. If I'm taking the family on a trip, maybe there's something I can do for my business while I'm out there.
Yeah, absolutely. So let's just talk a little bit more about that because it's fun. That's the exciting part. We all like to go on trips. I'll tell you what not to do. Someone said, hey, I went to New York, I pulled out my laptop and I worked. So I'm going to use that as a tax write-off. And I said, no, you didn't have to go to New York to work.
Right.
But let's say that there was a vendor or a customer that this particular business owner knew in New York. Then go and visit and strategize and document the business. And then guess what? Then your New York trip was a tax write-off.
Yeah.
And I'm going to add a caveat to that. And I'm going to use one last trip example. I went to Maui for my 10-year anniversary a year ago. And I planned in advance that while I was there, I would go to a BNI chapter, which I did, and I would visit different business owners on the 5 specific days of the week. And we were there for 7. Now, if I wrote off the entire trip and the IRS were to come audit and I just said, yeah, 100%, they'd be like, no, But what I did is I documented the days that I visited people, and I actually even got a client out of it. And I wrote off 5/7, meaning I did business 5 days and I was there for 7 days. And so I wrote off a portion of it. So if the IRS were to come, I would have a very valid, calculated, documented, this is why I wrote off the amount that I did.
Yeah, perfect. Because we're not looking to see, how can we just push everything in there. It's like, what's some legitimate, good, honest ways that we can, I think it's good, even not just tax strategy, but even for your business. Like you said, you got a client out of it. Whereas maybe if you hadn't been thinking that way, you wouldn't have been thinking that way.
Yeah.
So yeah, that's great. I appreciate that. I can't encourage people enough to come to you and get the people around them that they need to grow their business. Jen, tell us how people can get a hold of you, get on your website. Tell us those things.
Yeah, absolutely. Probably the easiest way is to visit my website, riseaccountingllc.com. And there's all the different ways to contact. You could go to Facebook, Rise CPA and Accountants, LLC, and Instagram at Rise Accounting, or Jen, Jen, at riseaccountingllc.com.
Perfect. Thank you. Jeff, with Kasteel Property Management, we do more than just watch your rental property. We protect it, cultivate it, and help your investment grow.